This is going to be very interesting. How to use a trailing stop loss in football trading. In this video coming up, I'm going to be showing you some more advanced, more alternative ways to trade football on Betfair. I'm going to be showing you a concept that is regularly used on the stock market, but I'm going to show you how we're going to apply it to the gold markets on Betfair. This video could be a total game changer for your football trading. So coming up in this video, I'm obviously going to firstly have to explain what a trailing stop loss is. I'm sure you all know what a stop loss is, but what is a trailing stop loss? I'm going to explain that so you're not confused at all. And then obviously I'm going to explain how we can apply it to football markets. This is a concept used in the stock market, never really used in the football markets, definitely not by beginners anyway. So I'm going to show you how we can apply it to the football markets. I'm going to give you real life trading examples recorded on the Betfair exchange as well. And most importantly, I'm going to show you how you can use this concept to create risk-free situations. You could literally win 100% of your stake after developing a risk-free situation. So definitely stay tuned through the whole video to see exactly how we can do that. And plus, there is a freebie. So if you do stick around till the end of the video, I'm going to show you how you can get a copy of the method that I'm going to teach you in this video. I'm going to be giving you a free PDF ebook that you can download, and then you can follow that very easily if you want to try and trade and practice with this strategy on the exchanges for yourself. That is Gold Trader 1.5. I'm going to be showing you how you can download that for free, and it's going to be good. It's going to be good. Like I said, this is a very advanced way of trading football. I do not think I have seen anyone else online share this way of trading football for free. You're getting this for free today. So strap yourself in. It's going to be fun. Let's get into it. So I am assuming if you've traded at any point, you know what a stop loss is, but let me just quickly run through it. What is a stop loss? So a stop loss is basically the price where we will exit the trade. Once we've entered the trade, we always have to have a price where we're going to exit the trade for a loss, and we're going to stop the loss. So basically, if we were to enter a trade at a price like 1.50, a stop loss point could be 1.30, which means that once that price hits 1.30, we're going to exit the trade for a loss and stop the loss from getting worse. So a stop loss pretty much does exactly what it says on the tin. It stops the loss, and it helps ensure that you limit your losses. So it's very, very important that when you enter any sort of trade, you do have your stop loss point, you have your exit point. You're not just going in and hoping for the best. And in financial markets, stop loss is crucial. You kind of always have to have a stop loss, because in certain markets, I mean, the price could move against you almost to infinity. So you've always got to have a stop loss in place whenever you enter a trade. It is a little bit different in the sports markets, because we know in sports trading, the price can either go to 1,000 or it can go down to 1.01. So it's still quite damaging if that happens, but it's not as damaging as it could be if it was to go to infinity, which it could in some cases in some markets. So stop loss is very, very important. But what is a trailing stop loss? I'm sure you know what a stop loss is, but what is a trailing stop loss? This is where we create a stop loss price that is a fixed amount below the market price. And I'm basically going to tell you, I'm going to explain the stock market concept before we get into how we apply it to the football markets. I'm going to show you how they would use it on the stock market. So it would be a fixed amount below the market price, which is good in a way, because as the market price rises, the stop loss price will rise too. And this can create some really good, lucrative situations. And I'm sure you've heard the saying, cut the losers short and race the winners. This is the main way that you can really cut the losers short and race the winners, is with a trading stop loss. Because if the price moves against you at a certain point, you're going to stop loss out and you're going to take the loss. But if it moves in your favor, you can keep riding it higher and higher and higher and make it more profit. Let me just quickly show you this. So if we were to get involved in the stock market and we bought a stock at $100 and we set our trailing stop loss at $10, that would mean that once we've entered the market, if the price hits $90, we're going to exit. We're going to stop loss, and we're going to have to lock in a loss, which would be a $10 loss at that point. And that's if we get in at 100 and it goes straight away to $90. But this is where it gets interesting. Say if the stock price rose to $105, and remember our trading stop loss is minus $10. That means that we now only exit the market if the price hits $95, which means that once that price hits $105, the worst case scenario for us is we're going to make a $5 loss, which it gets more interesting because obviously, like I said, once the price starts to move in your favor, then you can really start to make some good profits. Because if we entered the market at $100 and the stock price rose to $125, now remember, we've got our trading stop loss of $10 in place. That means that if that stock hits $115, we're out the market, but we're still going to make a profit. So once we've moved in a certain direction with the trading stop loss, you're guaranteed to make a profit no matter what, as long as you're disciplined enough, obviously, to exit out of the market once your trailing stop loss hits. So if we kept our original stop loss point, that price could have risen to $125, and then it could have gone back to $90, and we would have lost the difference, and that would have been our stop loss point. But by employing a trailing stop loss, we move with the price, and our stop loss point moves, and eventually if it hits 125, our new stop loss point is 115, and we know we're going to be making a profit no matter what. The higher we go, the more of a profit we have locked in. So it's definitely a great way of trading something like the stock market, that is for sure. But can it really be applied to trading the sports markets? And the answer is yes, but obviously it's not quite as simple as the example I just showed you in the previous slide. I mean, if we were to back a football team at a certain price, we know that we can't really set stop losses in the same way that we could in the stock market, because a goal goes in, then the price is going to smash through the stop loss. You're never going to get your stop loss matched, and you're going to have to eventually maybe take a bigger loss or a bigger win than you were expected in that aspect. So sports markets are drastically different from the stock market or from the financial markets, as you know, but they are tradable markets, and that's why we're here. This is the Sports Trading Live channel after all. So it can be applied to the sports markets. In particular, it can be applied to the goal markets. Best applied to the goal markets, in my view. Possibly the pre-match markets, it can work really well, but if we're talking about in-play football markets, then the goal markets is what you want to look for, and specifically the over and under 1.5 goals, 2.5 goals, 3.5 goals, all those sorts of markets. And one of the main reasons for this is because goal markets are what we call sudden death markets in football trading, where those markets, they don't exist all the way through the match. I mean, an over and under 1.5 goals market will close once 2 goals are scored. The 2.5 goals market, once 3 goals are scored, that closes too. So if you have your whole stake in the market, which is favoring over 1.5 goals or over 2.5 goals, once those goals go in, you can potentially win your stake. You can actually win the stake you're trading with. So, I mean, if you were going for a swing trade, which is very typical of trading the over 2.5 goals market, and you've probably seen a video on this very channel for that. So you might use a stake of, say, £100 to win 30 or 40 ticks and make maybe, is it 30% or something like that when the goal goes in. But I'm going to be showing you how you can race those winners. Race those winners. Hold your position, race those winners, and instead of taking 30 or 40%, you're going to be taking 100%. So you could potentially win your full trading stake, which is actually quite unique to football trading. And in the financial markets, if you're trading with a certain stake, then you're going to be winning a percentage of that stake. But in this case, we could potentially be winning 100% of the stake. And more will be explained. So I'm going to show you a quick example here, and then I am going to get into some real life trading examples that I recorded on Betfair as well, which will hopefully make this even more simple for you to understand. But say we entered the market and we wanted to lay under 1.5 goals at a price of 1.50. So this is usually going to be in the second half if the match is 0-0, and we're watching the match, we think the game is lively, a goal's coming soon, so we lay under 1.5 goals, and then we set our stop loss point of being 1.10. So once that price hits 1.10, we're going to exit. It's going to be a 40 tick loss. That is where we're going to stop the loss from getting any worse. Now, what can happen with the goal markets is that if a goal is scored before we hit the stop loss of 1.10, then we're going to employ the trailing stop loss, and we're going to move the entry point to 1.50. We're going to move the stop loss to our entry point, rather, of 1.50. So we're going to shift it up. And basically, that's going to put us in this sort of situation where we stay in the market from that point, and if another goal is scored, we're going to win our full stake. If the price then hits the trade and stop loss point of 1.50, we just exit out of the market and we're not going to take any loss. Remember, that is the price we entered the market at. So if we exit the market at the price we entered at, we're not going to take any loss. So in this situation, in this scenario, we only need one goal to essentially put us in a risk-free situation where we could win our full trading stake, providing you are disciplined. Providing you're disciplined. That is very, very important. But if you are disciplined, you'll be giving yourself a risk-free shot. You stay in the market till either a goal is scored or the price returns to the entry point. So obviously this might all be a little bit confusing, a little bit hard to get your head around, which is why I've got some live trading examples recorded on the Betfair exchange showing you exactly how you would trade the gold markets with this methodology. So check this out, and I'm sure you're going to start to realize it is a lot more simple than it might have first sounded. But before we do get into that, I do want to remind you that if you like what you see in all these videos, very soon I'm going to be opening the doors once again to my premium football trading video course, Ultimate Football Trading. It's the biggest football trading course ever made for Betfair. I only open the doors to new members a few times a year, so check the links in the description of this video to see how you can apply and get yourself on the waiting list, so you'll be the first to know when the doors open once again. And this is only for those who are serious about taking their football trading to the next level. So definitely check the link in the description if you'd want to know more about that. But let's get into the live trading examples. I want to show you how we trade with the trailing stop loss in the gold markets. So here is a match between Stuttgart and Fortuna Düsseldorf. We've entered the goals market. We've entered the 1.5 goals market, and it's currently 0-0. So how we'd use the trailing stop loss on this market is we are going to enter by laying under 1.5 goals at 1.40, as you can see that I've already done just a moment ago. And I'm going to say that my original stop loss at the moment is once this price on under 1.5 goals hits 1.10, I'm going to immediately cash out for a loss. So you have to do this manually. There is software that could do this automatically, but I don't want to confuse you with that. But anyway, so for the moment, I'm just saying that, hey, look, I'm in the market until that price hits 1.10, and then I'm out, and then I'm just going to cash out for a loss. If a goal goes in, then we're going to use the trailing stop loss strategy to try and maximize our profits and make more than we would if we were to cash out. But anyway, we're going to let this one play and see if we can get a goal pretty soon. That would be very, very nice on this. So not a great start to our examples, our live examples on the trailing stop loss strategy. Our stop loss has been hit, 1.10, so we've got to do this manually. We've got to cash out for a loss. And remember, at this point, the price is going to start moving against you, so you're better off trying to do this as quickly as possible. So anyway, we've had to lock in a loss on this one, so we didn't get the opportunity to get a goal and see how the trailing stop loss would work. But I thought I'd include this little example in there just to show you that when you do set a stop loss, you do have to go and do this manually if you're trading just using the Betfair interface. So you have to have that discipline to know that, hey, look, the price has hit my designated stop loss, so I've got to cash out. So in this one, remember our original risk was £40, but by having a stop loss, we've got that loss down to £28 on this one. But anyway, hopefully on the next example, we're going to get a very, very good example of what happens when the goal goes in, and we can actually employ the trailing stop loss strategy. So not a good start, losing trade there, but it's going to get better, I assure you. This is West Brom against Millwall from the English Championship. We just laid 1.40. We just laid under 1.5 goals at 1.40 with a £100 stake. So our stop loss is going to be 1.10 on this one. We're keeping that consistent for the video demonstration. But if we can get a goal soon, we can fully demonstrate how to use the trade and stop loss to maximize your profits. I assure you, this is West Brom against Millwall. Not sure why it keeps changing at the top, but that's Betfair for you. But anyway, we're in the market in this one. 0-0, 61 minutes gone. So we just had a goal and West Brom have taken the lead. So we've got one goal, and if you see here, we could cash out now, take £36, which wouldn't be a bad return actually for how long we were in the market on this one. But by using the trade and stop loss, we're going to basically, with discipline, obviously give ourselves a free shot at winning that full £100. So we could take the £35, or we could twist and stay in the market and try and win the full £100, knowing that if this price hits our entry point, which was 1.40, then we get out the market for what would then be zero. It would be a break-even situation. And I can kind of show you what would happen there if that price hits 1.40. So this price on under 1.5 goals is going to tick down and tick down with time. But if we get a goal at any point before it hits 1.40, then we're going to win all of that. We're going to win £100. And considering the profit we could take at the moment is 34, it's almost tripling our money. So this is why it can be quite powerful to employ the trade and stop loss. But obviously, I mean, you know, one of the downsides is that there might not be another goal and it hits 1.40 and then we're out for break even and there's nothing gained from it. But we've got estimated, I would say, about 15 minutes in the market, and if we get another goal, then that's it. We take in that £100 profit straight away. So that is the essence of the trade and stop loss. Remember, our stop loss was at 1.10, and we've just moved it up now to 1.40, which effectively is giving us a free bet situation at winning this £100 stake. But anyway, let's see how this one develops. It's West Brom 1, Millwall 0, 69 minutes gone. And we stuck with it. So West Brom got the second goal. So we instantly win the whole 100 there, as you can see. Just going to show you how the market played out. So I can quickly show you the price went down as low as 1.30. So we're nowhere near our original stop loss of 1.10. We got the goal. The price went up above evens, as you saw. And we stuck with it. And instead of cashing out for the £35 or whatever it was, we've almost tripled it. I know it's not quite triple, but we've almost tripled our money just by hanging in there and employing the trade and stop loss. And remember, if we were disciplined, once that price hits 1.40, we were getting out the market and we were not taking a loss at all. So once we got that first goal, we were pretty much in a free bet sort of situation. It was a free chance at winning the full stake, which, as touched upon, is very, very unique to the football trading and the goal markets. So in the end, successful trade there with the trade and stop loss. We got the 2 goals we needed, and we're out with taking our full stake. We got our full stake as the profit. So here's a match for the English Championship. It's Nottingham Forest against Sheffield United. And we're going to get involved on under 1.5 goals market on this one. It's currently 0-0. So we're going to lay under 1.5 goals here at 1.50 with a £100 stake. Gives us £50 of risk. And we're going to set our stop loss point however long we're prepared to stay in the market as being a price of 1.10. So once this price is 1.10, I'm going to get out of the market and take the loss. But if we get a goal in the meantime, then my new stop loss point is my entry point of 1.50. So let's see if we can get a goal. The money is being taken and it's 52 minutes on the clock, and a goal very soon would be ideal. So we just had a goal. Nottingham Forest took the lead on 69 minutes, and let's have a look at where the price has gone now on under 1.5 goals. It went as low as 1.22, and immediately after the goal it's now risen to 2.08. So our stop loss point is no longer going to be the 1.10. It's going to be moved now to where our original entry point was, which is 1.50. So from here we stay in the market until that price on under 1.5 goals hits 1.50, and when it does, we get out for a scratch trade. But if we get a goal in between, we're going to win the full £100 stake. We're not cashing out at the moment. That is the important difference here. We're not going to take that £26. We're going to hang in there and try and see if we can make the £100 or we break even. So 1-0 Nottingham Forest, 70 minutes on the clock, and just a rough guesstimate, we've probably got about 10-15 minutes to get the goal that we need. So let's see what happens. So 79 minutes, and it's still only 1-0 to Nottingham Forest. So it's not really been a high tempo match since the goal. So we're going to exit out now 1.50, and this is the tricky part, because this is where you need the discipline. You need to be able to say, hey, look, the 2 goals never arrived in the window. So we're just going to get out. We're going to get out for no loss at all. If another goal goes in, then so be it. It doesn't fit with my plan. So in the end, scratch trade on this one. Nottingham Forest 1, Sheffield United 0, 18 minutes on the clock. We didn't get the 2 goals we wanted. We got the 1 goal, so that means we take no loss at all. But we're in the market for a good stretch to try and win the full stake, and there will be better trades to come. You have to keep that in mind. 60 minutes on the clock in this one. It's Liverpool 1, Cardiff 0. So we've already had 1 goal, which means we're going to get involved on the over and under 2.5 goals market. So just 2 more goals is all that's needed to close this market. And with this particular match, I mean, we're expecting lots of goals today. The markets were expecting it too. It's been a bit of a slow burn up, but it's really started to pick up in the second half, with Cardiff chasing the equaliser and actually looking pretty dangerous. But we've got to expect some more goals in this one. So we've laid under 2.5 goals at 1.55, and I'm going to set my stop loss point to be 1.15. And if we can get a goal before it hits the 1.15, puts us in that risk-free position, because we're going to employ the trailing stop loss at that point. So if a goal soon would be pretty good in this one. It's Liverpool 1, Cardiff 0, 61 minutes on the clock. And there we have the goal pretty soon after we got in the market. Really, really good goal actually as well from Liverpool. So it's now 2-0, and we're going to now employ our trailing stop loss. So we had our original stop loss point, which is now scrapped. Now we stay in the market until, as you saw, what our entry point was, 1.55. Once this price on under 2.5 goals ticks down and hits 1.55, then that is our new exit point. And if it does hit that, then we're not going to take any losses at all. But if we can get a goal in the meantime, we're obviously going to take that full £100 stake win. So if you look at the cash out amount, currently we could cash out for £44 and take that guaranteed. But if we stay in the market, we could more than double that. And that's the whole essence of the method. So we're staying in the market. We should have until around 84 minutes, I think. Just a rough guess, but we should have around 84 minutes to get the 3rd goal that we need. And once that 3rd goal arrives, that's it. We don't need to do anything more. So let's keep an eye on the match and see if we can get that 3rd goal. Well, that's the great thing about trading the goals market, is it doesn't really matter who scores the goal, because Cardiff have just pulled one back. Very surprising, just from nowhere, really. Liverpool have been really, really dominant in this one. And we stuck in the market. Let me just show you the chart. Again, 77 minutes on the clock, and the price was just around evens. The last price matched, you can see there, actually, 1.96. So we were nowhere near hitting our original stop loss or our trailing stop loss. We got the 2 goals we needed within the window. So it's almost the perfect trade when you're trading with the trailing, when you're trading with the trailing stop loss. Whoa. Easy for me to say. But anyway, successful trade there. That £100 there is going to be ours, obviously minus the commission as well. So Liverpool 2, Cardiff 1, 77 minutes on the clock. And that is about it for all the live trading examples of that way of trading the goal markets, of using the trailing stop loss. You can see actually from the videos, it's very, very simple. I showed you all the different scenarios. I showed you when we just had a straight loser, hit your stop loss point. You saw the break-even scenario, and you saw the winning scenarios as well. So there wasn't really too much more to demonstrate, and you can see how simple it actually is. It actually is a lot more simple to employ this way of trading than you probably thought right at the start of this video, that is for sure. But of course, no football trading strategy is ever perfect, and there's no strategy that is ever going to have you win all the time. There's no magic bullet, and there are criticisms to obviously keep in mind about this way of trading. And one particular criticism I would definitely say is that it does require huge discipline to trade in this way. And I would say that this is definitely not a way of trading for the average newbie, or definitely not a way of trading for someone with a gambling background who is a newbie to football trading, because there is going to be so much temptation to just let it run when you feel like that goal's going to come, you've hit your stop loss point, or you've hit your trading stop loss, you're like, nah, the goals are going to come. They're coming. They're definitely coming. And obviously, I mean, if that's what you want to do, you want to just have a bet, then just have a bet. That's what I always say. I always say, look, if you're going to trade, trade. If you're going to have a bet, have a bet. But don't sometimes have a trade and then sometimes have a bet, because you're going to end up with very mediocre results in the long term. You really have to stick to your plan and be consistent. So that's why I definitely say that, because there's so much discipline involved, it's something for the more experienced football trader. And it could be another reason why getting some sort of automated software is something to look into. Now, I'm not going to dive into that in this video. I'm not going to get into any details about that. If anyone has any ideas, feel free to share that in the comments. But that is definitely an option. If you feel that maybe your discipline is not there, there could be a way to automate it so that the software exits the market for you instead of you having to do it yourself. And of course, we need, another big criticism of this way of trading is that we do need to get the goals within a certain time window. So if you watch those live trades closely, you'll realize that we've got, say, 20 minutes, 30 minutes in the market to try and get the goals that we're looking for. And what could often happen is that we could get it right, as in we think there's going to be 2 more goals, we think there's going to be 3 more goals, but they don't actually arrive while we're in the market. You could exit out of the market and then see the goals fly in, and then you're kind of kicking yourself. And again, this is a big test for your discipline, and this is why I say that I don't think many newbies will be able to trade this way straight away. This is definitely for the bit more intermediate or a bit more experienced football trader to definitely explore trading with a trade and stop loss, because not many newbies will be able to see the goals fly in after they're out of the market, and then have it not affect them psychologically to the point where it gets to the next trade and they're like, well, on that last trade I exited the market and then the goals flew in. So maybe on this trade I shouldn't exit the market because the goals are probably going to fly in. Like I said, I mean, that you're ending up gambling at that point. And like I said, if you're going to have a bet, just have a bet. Just put the money in the market, walk away and have your bet. But if you're going to trade, then always trade. That's the rule. That's the rule that I live by. And I've been trading football for so long that I'm kind of numb to it, where I exit a trade and then a goal flies in seconds later. It happens to me all the time. The goal that I was looking for happens to me all the time. And it gets a little bit annoying for maybe 10 seconds, 20 seconds, but I just shrug my shoulders and get on with it. But I've been around the block quite a few times with football trading. So like I said, I'm numb to it. But in the beginning, I was like the typical newbie, where it would affect me psychologically and it would affect how I approach the next trade and how I approach trading the next day. So again, that's one of the criticisms of this method, is that you're going to need the goals within a certain time window, and if they don't arrive within that, then you could be right about the trade, but then you've either taken a loss or you've not made anything at all, and it can get a little bit frustrating. And which leads me on to this one. Another criticism is that there is going to be a low strike rate with this. I mean, I showed you the live trades, which I appreciate. I mean, I get this comment all the time. It makes it look easier than it actually is. And I mean, it's not my fault. I'm just putting up some live trading demonstrations for you guys to see. But in practice, you're not going to get the winners all the time. There's going to be a lot of break-evens. That is for sure. There's going to be a lot of times where it just goes straight to your stop loss. You think there's going to be a goal coming, and then it just doesn't happen. Your stop loss is hit, and then you just get out of the market. I mean, at the end of the day, patience is key. But of course, match reading is also pretty key. And the more you practice reading the matches and trying to anticipate when goals arrive, the better you'll be, the better you will get in the long term. But patience is definitely key, because there's going to be a lot of break-even situations. And again, you're going to be faced with that question of, do I let it run? I haven't had a winner in a long while. Should I just let this run? And then sometimes you might get it right. Sometimes you might get it right. But again, if you're going to gamble, if you're going to have a bet, have a bet. If you're going to trade, stick to the trading plan every single time. Anyway, as promised, I do have a freebie for you. And if you like the look of this way of trading football and trading the goal markets, you watch the live trades and you want to give it a go yourself, you can download the system for free right now. You can download it for free. I put together this PDF. I put it together step by step to show you how you can trade the gold markets using the trading stop loss. It's a nice beginner's way of trading these markets, and the link is in the description. I put the link in the description of this video. I'm also going to leave a link in the top comments in the comments section so you can find it easier too. And you can just download that. You can head over to the exchanges and follow it step by step. You don't have to keep referring to this video, and you could give it a go and give the method a go. Leave a comment in the comments section as well to let me know how it went for you. Hopefully it goes well. And obviously keep everything else in mind. Keep all the criticisms as well on the previous slide. Keep that in mind as well. Just know that you do have to have patience. You're not going to win every trade, and it requires a lot of discipline to do well with this sort of method. But anyway, that is about it. And remember, if you did enjoy this video and you want to see more sports trading live videos, hit the subscribe button, hit the notification bell. You'll be the first to get all these videos, all these freebies, everything that I give out. Check the links in the description of this video as well. You're going to see how to get the football trading ebook that I just mentioned, and also how to get yourself on the waiting list for Ultimate Football Trading next time we open up. Thanks for watching. There's a few more videos for you to watch. Click on those, and I'll see you in the next video.